Right, so real quick, what we're gonna do, we're about to look at Tesla. We're on a 1 minute time frame. We're gonna look at for 5 days. Now, anybody know the fifth candle strategy? It's one of the strategies, fifth candle entry strategy I made. And all my data that I derived the strategy from was, made on SPY SPX. So now I'm gonna branch out and try it on some different names. I'm pretty sure that it's going to work. And so we're just going to see what it looks like. We're going to go through 5 days and see what the success rate is. Maybe I'll do the 10 days. Okay, so let's start this. This is December the 29th. Okay. One, two, three, four, five. Fifth candle is red. So this is where we'll close at. This will be our entry somewhere around where I got this white line, 463.83. So so that's the first part. Fifth candle, dictate the direction. The second part is a 50-cent move. And so we to the downside, so we need 463 or 53 right there. Bam. That's our move right there. Now, I teach this 50-cent move because it's a high probability. My research said it's 90% win rate. Now with SPY as well, it said the dollar move is 90% win rate because on average SPY move about $2, even like, when it's barely moving, you're gonna get at least a $2. But it's like you gotta be careful with the trying to get the $2 because it could be like you could just barely make it. You gotta like really be on it. And so the research told me 50 cent or a dollar move, that's a 90% win accuracy rate. $1.50 move with SPY, that's a 80% chance win rate or whatever. So I'm testing this on Tesla right now. So the fifth candle entry strategy held up, for the 50-cent move. We got that. So now anything beyond that is extra. So like I said, what we'll do now is we'll set, like say we'll have like another um contract. Just say we get two contracts, or three or whatever, multiple contracts at one time. So then after we hit our initial move, then the next contract or contracts, we set the stop loss uh where we just took profit at. So this move 50 cents. So now this is where our stop loss will be. And so worst case scenario, we get stopped out, we get this 50-cent move for the second contract as well. So looking at this, if we would have got in right here, it would have came down here, and this where we would have took profit. Um, and then when then that's when we would set our stop loss here, and we would end up getting stopped out. So both trades we would have made the 50-cent move. Now just say if by the time we got in with the entry right here, but just say we was a little too slow or whatever. So just say this move right here had already came in and up or whatever, start moving up. So just say we'd have got in right here. Bam. So we get in right here. Six, just say about right here. So we get in right here. 464.44. So we need 463. Let's see, that's what we missing six. So 463.94. So just say we got in here, then we would need here. So basically, we're 63.44. So bam, so just say we got in here, then and we looking for shorts. So we would have to wait till this came up here, did this thing, uh, came here, did this thing, and came down here. Bam. Then that would have been the first 50 cent move. Then we set our stop loss or whatever. We get in. So just say we looking for the next, move to hit. Now we probably would get stopped out here. Worst case scenario, um, like I said, you have the 50 cent move for the first and the second contract. So either we caught it here right on time, made the first 50 cent move profit here, then set the stop loss for the next one. And got stopped out here, and we wasn't fast enough. And just say we well, no, because this is a big move, so we would have got stopped out. And so, bam. Now, another option we could do, because as far as my research with SPY, it's kind of ideal for you not to necessarily, now this is kind of risky now. That's why you have to give yourself time. You can't like be doing same day options. But on average, with SPY, the move sometime like it's the 50 cent move is made like right at within like 10 minutes, but sometime like the average shows that it's around 10 like 10 15 10 o'clock, between anywhere from 10 to 10:30. Like it could range. So around like just say 10 10 10 10 15. And so I would say, really, I think when I did the math, it showed me like 3 minutes and 30 seconds after 10:30 when like the main stop out was happening. So I would say, set your stop loss, 5 minutes after 10:30. So just say if we did that. So just say we captured our first move, our main move, or it did a 50 cent move, we did that. Now the next one that we want to trail, say we let that one we wait to set a stop loss, see if we're gonna hit the profit, uh get back in profit by around 10:30, or we can set the stop loss there, by that time. And so if we did that and let it run, it did this move, came back up, down, then this would have hit. So this would have been a dollar move from, so just say this is the first entry to here, it's a dollar move because we got like 463, 86, 80 something. So 482, 88. Then right here, 481. It's so $2 move. Um, and then I say around 10:30, 10:30, you want to like, the move should pretty much be made. And so I know with SPY, it's risky to try to make the $2 move. Is about an 80% chance to make the $100 move. And so I would just be trailing here and just trailing. So, you know, at 30, around 35 to $40 increments, far as the option being, in profit. So if I'm up $40 as far as the profit of the option, um, so as I go up another 30 or $40 in profit, then I'll scale another 30, $40. I trail the stop loss, because that's how SPY usually move around the $35 to $40 increment, far as like if it's at like a certain level of interest, like you just kind of keep visiting there like a support area or something like that. And then before it move on to the next level, it usually like around a 35 to $40 move. So I'll keep trailing somewhere like around there until I get stopped out. And so, I probably would have got stopped out somewhere here. But so anyway, so let's just go to it. So on this day, the move worked out, and you could have potentially trailed and made money, but it had some chance of getting stopped out if you just put the stop loss right after. So let's see. So that's the 29th. Okay, the 30th. See we playing out. One, two, three, four, five. So it's telling me if I get in here for a short at 456.35. So I would need it to go to 453. No, 455. I need to take off 1585. So 455.85. So about right here. Just say about right there. That's my 50 cent move. Bam. So I made the 50 cent move. Now, if I want to trail, okay, so I can set my stop loss here. Um, so just say if it goes to $1, let me see, 50 cent, 35, 55, 35. Hold on, let me see now. About right there, dollar move. So so it's starting to get risky now. This 50 cent move, this extra 50 cent. So this is $1.50. So from where we got in, 50 cent, dollar 50. Now, I would say um if you're trailing, you good because you could just get stopped out. Um, but seemed like 57. Yeah, it seemed like it just started going back up. It came back down like right at the end, but not as low as this. So, so this is the second The second day, our move was secured, and then that was like if we wanted to take the dollar 50, so it worked out. And so really what I'm testing really is if I do the fifth candle strategy and a 50 cent move, will I get success? The other trailing contract, that's just extra. That ain't like necessarily what you have to do. This is the move, the fifth candle right here. So it's telling me one, two, three, four, five. So it will close here. So we will be getting in about right there. So 55, 455.07. So I need 455.57. So we should go a little bit up. Be sure. So bam, from here to here, that's our 50 cent move. So basically, how I really teach it is we don't need to look for the big move because what we do, we want to compound. We want to do small moves. We want to be for sure. We know that now, this was built on a SPY model, but like I say, I'm sure to work for others. But with SPY, you had a 90% accuracy rate with a dollar move or a 50 cent move. Now we know if you have certain days where it might be really low volume and it's really ranging and it's like a real tight range, it might be kind of hard to even get that dollar. Like, it might be close, but for sure you can get that 50 cent move. So instead of looking for the big moves and it possibly go against you, let's just do the small move that shows you got a 90% rate at least, and then just do more contracts or just do a higher delta. So that's what I teach. Larger deltas or more contracts. So we know the percentage rate of us hitting a 50 cent move. So let's just put more contracts on it. So instead of trying to get the $3 move, $4 move, just put 4 or 5 contracts on there and go for the 50 cent move. You're gonna build the maximize the profit like that. But if you want to say, you know what, I want to try to get for the big move, okay, so this is why I say, okay, this is where we'll put the second contract in. We'll do 2 contracts because we know more than likely we're going to hit the 50 cent target. And so we hit the 50 cent target, bam, here to here. So the first contract we have an automatic set. When it hit 50 cent, take the profit. Then the second one, we don't have a take profit or a stop loss. And as soon as this profit make, then it's gonna, still be going in profit a little bit. So that's what we put the stop loss on. And so worst case scenario, if we go against us, then we made the 50 cent move on both. Now, if it don't go against us and it keep moving, then we could just trail and try to get more profit on it. And so worst case scenario, you get stopped out. Even if you get stopped out right away, you you still gonna have at least that 50 cent move even on the second contract. And so this checked out. Let's go to the next day. So now for the next one, we're just gonna see if the 50 cent move work. We're not gonna take account of the second contract because that's just extra if you want to maximize. Okay, one, two. three, four, five. Now we can see right there already, we know that the 50 cent move is going to be made. So bam, right there, right there. And this would be a good one. So bam, right here, say that's around 53.95. So 53.45 about right here. About right here, that's the 50 cent move. So bam, get here. Let's see, go right there, do his thing. Bam, right there, 50 cent move made. Start coming down, close here. Now, depending on how fast that you get that stop loss in, or if you want to just wait to like I say around 10ish or whatever, however you want to do it, but just say depending on how fast you get that stop loss in, you say if you so bam about right here, took profit, say you get that stop loss in by the time you get here and you set it, that boy gonna come here, here, and you're gonna get stopped out. Now, if you was a little slow on the draw and you let's see, say you let's see how can we do it. If we came here, here, just say we set the stop loss here. Bam. Now this already move is already in play. So it all depends. These just 1 minute candlesticks. So it just kind of depends on how fast you get it in, that stop loss. Because once you get here, it's smooth sailing for a minute to about right here. So if you trailing, um, you can make a nice little move at least to right here. Um, or if you just say, we're gonna wait till around 10 something, around 10 to make the move. You had the opportunity or all this. But, to be safe, I would say just try to get that stop loss in as soon as possible. Um, because doing it this way, the worst case scenario, you get stopped out. Even if you get stopped out right away, you just have, that extra um 50 cent move for the second contract. Um, but I think in this situation, um, probably would have been a trailer to at least right here before it went against you. Okay, let's go to the next one. Oh, that was 5 days, so maybe they count the weekend. Okay, let's gotta have let me see. Let's get some more time. Let's see. Let's do 10 days, 1 minute. So now what we're gonna do, we not gonna even waste time of looking at the second option, the possible trail. We just gonna see if the fifth candle entry and the 50 cent move pan out. One, two, three, four, five. They're telling us entry right here to the downside. So we know for sure we hit our 50 cent move or more. Okay. We're gonna go to the next day. One, two, three, four, five. Telling us our entry here to the downside. Let's see. 49, 59. We need four, excuse me, 494.59. We need 494.9. About right there. Right there. And even if we was late, any any one of these would have did right here. So we know the move would have been made. And and so this is more to, so look at that, that's more to the downside. And so I did a study with the SPY, on average out of 10 trades, the fifth candle entry strategy was in line with the 15-minute ORB. So on average out of 10 trades, the same direction that the ORB gave, to stay to the downside, the fifth candle entry strategy gave. So it's telling us we're going to the downside. So came right here, came up, but look, it's coming down. It's coming down. Now, out of the 10 tries on average, it was two of the times, 20% of the times that the ORB and the fifth candle entry strategy didn't agree. And so that means out of 10 trades, it's two times that our direction was different. Now, out of the two trades, my direction was correct. And then the other half, the other trade, 15-minute ORB was correct. So now if we look for the 15-minute ORB here, just say we aligned it up to here at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So this is a 15 candle. So this line up here and this line here Um, let's see. So if we look at this just say this would be the 15 minute, the bottom range of the 15 minute. This candle closed outside the range, and then this second candle uh retests and close outside the range and confirm. So once this closed outside of the range, then this would have been entry to the downside. Now, even though the 15-minute ORB kind of match up like with the fifth candle entry strategy about the same. 80% of the time they agree on the direction. 20% of the time they disagree. But out of 20% of the time, I'm 50% right, and then on the other 50% they right. So pretty much we're the same, but only different is you get in later in the game on here. So it's about 10-10, and this is about, looking at, you know, the movie looking to be almost secure done, made by like 10:30. So you just getting in at pretty much 10:13. And so even though you catch a move, just say if I wanted the 50-cent move from here, you say get in about right there, 87, 487, 83. We need 487, 33. About right there. So to say even we just look for a 50-cent move, that's the 50-cent move. If we want to go a dollar, let's see. Let me make sure. 486. So say around 486.60. So about right here, that's about a dollar move. And so this is the direction the 15-minute RB says to the downside. The fifth candle entry strategy told me to the downside, but it was way here at 9:35. And so all this we would have took advantage of before the ORB. Now, you still had a little bit to make here on the ORB, but the move was pretty much made already and done with. Now it's to the upside. But we still agree. The ORB still agreed with the direction on this one of the fifth candle entry. Okay, let's go to the next one. 1, 2, 3, 4, 5. Tell it to the upside. So right here, we already know 488.52. We need 489.02. Right there. That's our move right there. We made it worked out. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That is telling us to the upside. Look like it's not gonna work out this time. 1, 2, 3, 4, 5. We're gonna see it through though. Look like it ain't gonna work out. Let me switch to this. So, so we about, matter of fact, we're gonna use this. So 485.67. We would need it to go, let me see, 485.57, 486.07, about right here. Now, this would be entry. This would be take profit. Now, it doesn't look like it's going up to the entry, but let's see it play out. Came back up to take profit. Okay, that's the dub. I'm surprised. Okay. Now, one thing I do say as well for the strategy, because you have other stuff. This is just if you just doing it, blindly or whatever. Um, if you look on a diagram that I have, I say you go by the fifth candle unless all the other confluences strongly disagree. So let's look at what we have. So this is another part, but we'll just say on face value that this one it didn't pan out. Now, so what you also want to look at is the other confluences. So right here, if we looking, what is the RSI? The RSI, let's see, this one was 74, 40, 39, 26. So the RSI is low. Price is under the 5 and the 9 EMA. It's under the 20 and the 50 EMA. It's under VWAP. It's under the 100 and the 200 EMA. RSI is down. Um, MACD center is down. So everything strongly disagree with the bias. So that's something that you kind of if you're looking at that, you kind of know like, well, let this play out a little bit now. But we're just gonna say, we're just gonna be fair and say it didn't pan out. But you still want to look at this other stuff just so you're not staying in a trade, uh now. But let's see what the 15-minute ORB did. So my strategy said to the upside, which was incorrect. Let's see what the 15-minute ORB says. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So let's see. Not yet, still in range. That might be. You might can count that. I think you probably can count that. That's kind of close. Let me see. Hold up. Let me be sure. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, no, that's good. So, okay, I would say this is confirmation right here to the downside. Okay, so would you say that one didn't pan out, but it's already like what, been correct so far every time but that time. So let's see what we got here. Okay. 1, 2, 3, 4, 5. Okay, we already know that's at least a 50-cent move. Okay, panned out. 1, 2, 3, 4, 5. Telling us to the downside. 63.87 we need, and this might be within the five day ones we already did. 63.87, we need 63.37. Yeah, we checked out. Um, I think all the other ones checked out because I think these might be the previous five we did. Because now we're on a 10 day. We previously did 5 days. 1, 2, 3, 4, 5. Downside. Yep, that checks out. So basically, out of 10 days with Tesla, is one day that it didn't check out. Um, and if you looked at the confluences, um, like all the other confirmation, it strongly disagreed. So on that, I would have said the bias would have been invalid anyway. So you wouldn't I wouldn't have took it on that one anyway. So but just for testing sake, we'd say one time out of 10, the one time it didn't check out. So let's see. Let's see. See what QQQ looking like. 1, 2, 3, 4, 5. Right there. Yeah, we know that's a good move right there with it checked out. 1, 2, 3, 4, 5. Got in right here. Definitely would have made a 50-cent move because that's 1957. We just need 1907. So by 9:36, we pretty much would have been out. 9:36, 9:37, 9:38, 9:39, 9:40, 9:41, 9:42, 9:43, 9:44, 9:45, 9:46, 9:47, 9:48, 9:49, 9:50, 9:51, 9:52, 9:53, 9:54, 9:55, 9:56, 9:57, 9:58, 9:59, 9:60, 9:61, 9:62, 9:63, 9:64, 9:65, 9:66, 9:67, 9:68, 9:69, 9:70, 9:71, 9:72, 9:73, 9:74, 9:75, 9:76, 9:77, 9:78, 9:79, 9:80, 9:81, 9:82, 9:83, 9:84, 9:85, 9:86, 9:87, 9:88, 9:89, 9:90, 9:91, 9:92, 9:93, 9:94, 9:95, 9:96, 9:97, 9:98, 9:99, 9:100, 9:101, 9:02, 9:03, 9:04, 9:05, 9:06, 9:07, 9:08, So would have got in around 9:35, been out within about a minute. It would have made the move. Uh, Now, it's coming down a little bit further, but that would have just been, yeah, we're just gonna keep going. We just want to see where they make the move. We don't gotta look at the second option opportunity. One, two, three, four, five, 1966. So we need 20, let's see, 16. Bam, it would hit it right there. 9:36. We went up a little more just in case. Now I came back down after that, it came up, but we were already been out. One, two, three, four, five. One, two, three, four, five. 22:59, 6:22:59. We need 6:23:09. I said that right. One, two, three, four, five. 6:22:09. 50 cents. 6:23:09. Yep. 6:23. Oh, ooh, that's close. That's 6:23:08. Now, let's see. That's cutting it close. Okay, it eventually made it. 6:23. Okay. 11:09 it made it. Continue to go up, but 1, 2, 3, 4, 5. So we already can see 1, 2, 3, 4, 5. Entry would be here to the downside. We know it went down. So that would have made it. 1, 2, 3, 4, 5 to the upside right here. We knew it would have made it. 2091. Took profit about right there. You say you got into the next trader out right here. Trail start coming back against you, probably get out about right there. One, two, three, four, five to the upside. We know here, you know for sure, yup, all that. Definitely would have made it. One, two, three, four, five. 1936. 19, say 2086. I mean 1986. So will it come back up to hit this line? Nah, it went against me. Let's look at the other confluences. Okay, the RSI. Okay, so the RSI low. So we probably would have saw this at invalid. Let's look at the other stuff. The MACD said no. RSI said no. Um, it kind of was not below the VWAP. It's above the 200 moving average, below the 100, below, let's see, the 20 and the 50, below. So it was pretty much below everything but the 200 moving average, and it's kind of touching. I probably would have been a little weary, on the on this one. I would have been watching this one. And so let's see. I would have probably gave it to about like right here. And then if I seen like it wasn't getting above VWAP, so probably would have lost a little bit. Let me see. 17. Okay, we ain't gonna get to that. That one didn't work out. That was a dub. 1, 2, 3, 4, 5. Okay, we can see here. Tell us our entry here. We can see for sure it would have made it. So it's still looking like 90% with these other names as well. So, so I could say even without like looking at any other indicators, we were only just trading just the fifth candle and the 50-cent move is showing that it's consistently checking out 90% of the time. It's like it's going against it. It's not panning out at least one time. So we say we got something special on our hand.